Heritage Capital. Paul Schatz, nice to see you again.
Morning, Chris.
I guess really March, if that was the bottom, would have been the ideal time to invest, but are we still looking at that now?
Well, clearly the March low was the most significant low since the whole bear market began way back in July of '07.
Yep.
So now we're 30% plus off the low, and people are now starting to feel a little better. And my mantra has always been, you buy into weakness and you sell into strength. And that's the opposite of what most people do. The mistake they make is they wait until things have rallied. So people were scared in February and March, said, all right, let me wait till it goes back to normal. Well, after normal returns, you've already rallied 35%. Now what do you do? You're chasing your tail.
Yeah. One of the things that we have seen even in this past week, though, is announcements that are certainly going to lead to more job cuts, and that's from the automakers. Chrysler on Thursday, from GM yesterday, shutting down dealerships. Job losses often have a trickle-down effect on the markets, don't they?
Usually the job scene is the very, very last lagging indicator of all. It takes so much negativity to go on in a company before they actually get to the job cut. So I'd argue that what you're seeing now in GM and Ford and Chrysler has already been factored into the markets in January, February, March. So that I'm not as concerned about.
So the investors saw this coming, essentially.
Absolutely. Think about, GM stock is now a penny stock. It's $1.09-ish. And that was down from $4 before and higher than before that. So people certainly saw it coming. There's no secret GM's going to bankruptcy, and it's probably the healthiest thing for the economy.
And that's something that we need to take a look at as well. When you look at some of the signs, you talk about something you call misguided hope, which kind of scares, I think, people, because you don't want to hear about the hope being misguided. You want to have the optimism. Why are you concerned about misguided hope?
And it's funny you mention that. A year and a half ago, when I started to get much more concerned, people said, no, the economy is still growing at 3%, 4%, 5%. Things are going to be fine. And the cracks begin to appear. What I'm worried about now is it took the Fed printing, you can argue that the number, trillions of dollars to stabilize the markets and almost stabilize the economy. The government passed an almost $1 trillion stimulus package with more on the way. My worry is this whole flood of money has simply been to stabilize the banks and get their asset levels up so they can raise capital. What happens when the stimulus plan runs out in Q4 of this year or Q1 of next year? And more importantly, when the Fed begins to remove the punch bowl and we don't have the real solid footings of economic growth, I think maybe we won't fall off the cliff like we did after Lehman Brothers went bankrupt in September and then October. But I worry that the best case scenario for the economy is this really slight, slow, boring, tepid growth for a while.
Which is something that people don't really have the stomach for. They don't want to see the slow, boring, tepid growth. They want to see things get back to normal, if you will. Just a few seconds left, and I'll ask you the question I'm sure that all your investors that pay the big bucks ask you, but what do you do? Give me the short answer to what do we do right now?
I think you have the same philosophy that you've had and that we've had for the last 18 to 24 months. Until proven otherwise, the economy is on shaky ground. Enjoy the market's rally while it lasts. I think the market eventually goes back to at least 9,000, possibly 10,000 this year. But then the punch bowl is going to get taken away. We're not going back to Dow 14,000 anytime soon. Take it out of your mind. It's not going to happen. You buy into weakness. You sell into strength. Don't look in the rearview mirror and say, hey, what worked yesterday is going to work tomorrow.
So a lot of wait and see still. A lot of just being patient.
Absolutely.
To be the advice. Paul Schatz, Heritage Capital, thanks so much for being here. We appreciate it.
Thank you.
Always like to hear your insight. If you want to get a little more information, you can find it on our website at WTNH.